Hey guys, welcome back. Hope you had a good Thursday in the market. Last day in the quarter, March 31st. The Thursday. Time for a little higher decibels on our jazz. We're gonna go over some of the plays today, not too much. On Chevron made a big move, 100%. CBSH, this thing held up really well. We're gonna talk about that and some TA on Gamestop, what I think it's going to do shortly. Sub up, like up, comment down. Happy Money sticks around. We have a Twitter you can follow us at Happy Money YT, as well as a Discord server. Link for that is in the description. Free to join. There's Arnold gifts and everything. Today actually, yeah, it's interesting today. It looks like it's going to close as a green candle, which is good. It hit right at that 160 pretty much that I was saying yesterday. Let's see, it's the slow is like 158.51. Not sure if it's gonna hold that high into the weekend or tomorrow rather, but it could. That was basically, I pulled that just from the resistances back here. Those become new supports. It could come down a little bit. Max pain's 155, so maybe a little bit lower. But today actually held up better than I was anticipating. So basically now we're just looking for kind of a retest and see what happens back at this support, this 160-ish support. If it breaks it, it's not too bad. Depends on how far it breaks it and where it kind of finds another floor. But when it comes down to retest this, that's when we'll be looking at our indicators to see kind of if we're getting any divergences, if it reverses there, and what kind of shows up to see if we're in a kind of a bullish pattern at that point. At this point though, we're still bearish on the hourly. Still got a red MACD, red under the 9. Kind of bumped up here today. This rally today started actually with a RC tweet somewhere around here. It was looking like today was a repeat of yesterday for a while, which is just like dump in the morning, bounce, and then kind of just this little thing, and then a little bump around 1 with a new high, and then just a short into the close. Kind of like the same thing, a dump, and then kind of this, and then I was thinking this was the high, and then I think his tweet came in somewhere around here. And it rallied it for a minute, and then it kind of kept going up steadily, which was strange. Typically, those news algo rallies are just that. They bump it right when they scrape a RC tweet or whatever they're getting it from, and then it comes back down. But this one, for some reason, just kind of grinded up and sustained. So hit a double top here on the 5-minute. It's got a bearish looking MACD. RSI is kind of not diverging, but showing bearish signs. I guess it's a hidden divergence maybe. And now looks like it's coming down probably closer to this VWAP to close in about 40 minutes. So I got my bearish plays from yesterday. They worked out well today. I averaged into some of them. Didn't really take profits on any. I did get one more bullish play today, just in case this formation, this chart it's lining up very similar to something like this. So I thought today maybe could have been that once we started rallying, and maybe today is that, and maybe tomorrow's could be that. But I'm hopeful that this is the squeeze and not just some regurgitated pinch that we've had, and I think it still is. My thesis on that changes. It will be just probably once we hit a certain resistance, and then if we get a big day like this, a big down day after, basically. I mean, sometimes it melts, but see, these are rug pulls to me, where you have 2 big up days and 1 day to take away all of it, or almost even this, where it's just a huge range. This one didn't have too much of one. This gap down, but that was from earnings. This was a bit of a rug pull, I'd say, for sure. That also, I don't think we've had a rug pull. That's why I think partially just looking at the charts, we're still on an upward trend for sure. This was 1 day we made that 30% or whatever, and we've come up on 3, basically 2 down days. Today's barely bullish. We'll see how it closes. Almost 3 down days, and it still hasn't even come back to where we were at the beginning of that one epic rally. So if this day came down and basically dropped us all the way to 140, I'd say yeah, rug pull. This to me is just consolidation. Whatever happened with the halt up here and then the option shutting off, I don't know, but just looking at the chart, it looks like we're still in a very bullish formation. And bullish MACD on the daily. RSI is coming down nicely is what we want. Just depends on where we start to build a base and then start to see maybe divergences or upward momentum with some volume. I think it'll probably take till next week to get that, but I could be wrong. I mean, everything's still bullish on these longer time frames. 4 hours still looking good. MACD's coming down. See if it stays bullish tomorrow. Hourly's getting to the shorter time frames. It is bearish now, but not bad. I mean, it held up pretty well today, so I expect a little more down by Friday, and then probably, hopefully, big ups next week. And if we do see big ups, it could be 250, 300. I mean, we could be up 350, even higher. Because this is like a big bull flag it's building basically, and building a bull flag or a run after this bull flag would be epic. You think another 130% or so from there, and you're hitting pretty high highs. So we'll see. Could be consolidation could be all next week also, honestly. The options I'm getting are for the monthly Aprils, so that's the middle of April, so not next Friday but the Friday after, I think. Yeah. So I'm probably gonna get some tomorrow on Friday depending on price action. I'm looking for it to hold. I guess if it holds above, I don't know, it really depends on the price action, not just where it holds, but I'd expect it to hold above one. I mean, it's a Friday. They love to short it into Friday. Maybe 140. Even if it comes all the way down to 140, it's still not terrible. This flagpole's massive, so yeah, we'll see on that. But yeah, I think we're hopefully just legging up in this squeeze, which could take weeks, could take a month, could take, you know, we've been in it probably a year and a half, could be another year, and just slowly building higher floors, or it could only last a couple days. We'll see. Option plays, yeah, I'm preserving capital. I have a lot of capital this time. I'm pleased with how I've traded it. I'm trying to be careful and not get excited and not revenge trade. That's happened to me a lot, of course, and something you just have to kind of overcome. Today closed out at ISPO, a couple of them. The 10 calls, those are up a couple 100%. Shout out Donero. That thing looks like it's probably still going to keep going. It's got a great looking chart. Short interest is crazy. Borrow fee is crazy. Failed to leverage, I think, is crazy. I don't know. On share all that stuff. Volume today is big. It's red, but that's because I had this big gap up. So I'm not sure if it'll fully fill this gap or not. But today looks very similar almost to this, just minus the gap. So I got some more calls, or yeah, I got one more 12.5 calls for that, and then my 10 calls I closed out of this morning. I averaged down a couple rocket leaps I had. I got 12 more, I guess. Wow. Price is down, like my contract's down like 80%, so I just average into those. Those are 24.88 calls for January 23. My bull, let's see. So yeah, I averaged into my put debit spread today, as well as my call credit spread. My call credit spread is actually up like 40% today. I could have taken profits. I still expect this thing to work out where GME closes below 170 by tomorrow. I didn't really expect that rally today, or I would have taken profits and gotten back into it. But oh well. This will be nice. 1300 max gain if we close below 170. So basically, if we stay anywhere we are into close or below 170, we'll be fine. And this put debit spreads for next week, kind of as a hedge in case this is a pinch and or that was the peak and we just keep coming down. This isn't a huge gainer at all. It's a small play, but I did average into it some. And then here's a bullish play that I got yesterday that might average into tomorrow. This is for kind of a 280 price target buy. That's next Friday. And then this is what I'm starting to build up is long position for April expiration. So middle of April, 265 call. 265. I just looked at the option strat, and if I had a price target of 500 all the way up to 1,000, it's 265 long call basically. I think that's probably a good amount of leverage or maximum risk basically on their algorithms at least. So could get 500 calls, but I like 265. So I might get some more of these. It's nice to have just naked long calls coming into pinches or squeezes because you can always leg into them, make them debit spreads or whatever. You do see the theta decay on them faster just because you don't have a short leg in there. So that's what kind of sucks. And then timing to get out, it's like crazy because the the speed at which it's moving is you really can't even look at it. You just have to look at the chart and then close it or open it. But yeah, so probably get a little more exposure tomorrow. I've got to be careful. Gotta be careful though, just in case this is just a peak and we're just gonna come back down and consolidate at 125 for a year. You know what I mean? Like that always could happen. So trying to be slow to average in would really be nice, just to have confirmation first with some volume and basically big upward move. Then scale in, be late, not wrong, pay a little extra premium, but you know, have an account balance at the end of the day where you can keep trading or keep investing instead of just blowing up your account. Here's our Theta Burner account. 205 calls, of course, doing good, well out of money. Our 111s I'm gonna have to roll, I'm assuming tomorrow, unless it's below 111, then I'll probably be doing a lot of different stuff. That's much lower than I imagine. Rolling this though, show you guys real quick what we can do. So right now it's about, says it's negative. I could probably get that up. Earlier today it was a credit to roll to 112. So just rolling it up $1 a week. Not crazy, but it's a nice little hedge protection. And then on Fidelity, basically our covered calls on there. They were up today. Let's see. That rally I think probably made them go back negative. It's unrealized, and I'm also down in the play, so it's not a big deal, but just so you can see how premiums move when you're holding a position. So let's see, yeah, today's gain loss looks like I'm down 2% on them, $550. As time goes on though, this, you know, that'll be good for this option. It's got a lot of time. I have that one till May 20th, so time decay will be on my side on that. Let's see, 30 minutes to close. Almost down to that VWAP I was saying. We'll see how she blows. 155 max pain. Not sure if that'll change tomorrow. Maybe it might come down. Might just hold right there actually. Bullish on next week and maybe further on. Kind of how I was saying in January. We're not quite holding up like that, like this day, like this week. But at the same time, we're still looking good in a nice range. A lot of people are claiming Wyckoff pattern going on here, and it could be. I'm not sure. It doesn't look like it to me, just based on how steep all this is. I would say the accumulation would be in this, and I think that's too short of a time period, basically 2 months. His pattern was usually over like a year span for the accumulation and then distribution. That said, the upside after at the end of his accumulation phase, it gives like this rip up and then kind of consolidation, then another rip. And I definitely think that that's the pattern that we're looking like we're setting up though. So once that plays out, everyone's gonna all hail Wyckoff. But I don't think this prior move is that. Basically the rip up and then consolidation and a rip is a straight up bull flag and then a breakout from that. So hopefully that's coming soon. Thanks for watching, guys. See you on Discord. Peace out.